810 at Colorado 740 KVOR. Once again, Money Monday here on Colorado 740 KVOR with Accelerated Wealth. Chris Abeyta and Doug Berkey are here. Fellas, how was the weekend?
Very good.
Good weekend.
Good weekend. Did you get the fight? Did you watch the fight?
I did.
Yeah, there was a better fight in my street down the block than what we saw on pay-per-view the other day. Talk about a waste of money, but it's another story for another time. With Chris and Doug here with Accelerated Wealth, we take your calls every Monday at 540-0740. If you have questions about your money, retirement, and having enough money for retirement, you can email us as well at money@kvor.com. Over 40 years of combined retirement planning experience sitting right here to my left. Chris, of course, the author of the book, Retirement Confidence in an Uncertain World. Doug's a national Social Security advisor. So, fellas, what are we going to talk about today?
A couple things. We just had an investing summit with Greg Indovina. He's our lead portfolio manager. We had over 70 people there, including a lot of KVOR listeners. And we talked about active money management, Jim, versus passive money management. And he said something that was really important that our listeners need to hear. He said a lot of people are not getting what they really need with their money management. And I want to play this clip for people.
I originally went to Merrill Lynch because I thought that as I got into the financial services industry, that would be the best place to learn how to best serve my clients and how to plan investments and make sure that my clients would be able to reach their goals. And it didn't take long for me to figure out that was not the game that I had signed up for, unfortunately. It was a massive sales machine. It was all about the company reaching their goals, not necessarily the clients reaching their goals. And I became disillusioned.
Now, Doug, that's an interesting point he makes, because at times what my goals are and what the company's goals are, they're not aligned. Do you have to watch for that? How do you guard against that? I mean, help us out here.
Well, it's kind of challenging, Jim, because people really aren't getting what they think they're getting with some of the big companies. I know I started out early in my career with Fidelity, which is a great name in Boston. What I learned very quickly is there were tremendous incentives to sell particular funds compensated vastly differently, which might not necessarily be their best performing funds. And so what people have to realize is that they are not at the top of the food chain. Sometimes the company is. And so we have investment seminars and planning seminars coming up in the next week or two on Tuesday and Wednesday of this week and Tuesday, Wednesday, and next week. These are our last seminars until after the summer break, Jim, and people need to take the time to come and listen to these.
Doug, let's go back, though, to what he just said, because there were some things that really come out. There were three specifics that really come out of what he just mentioned a moment ago.
Yeah, he did. Basically, it was about the company's goals versus your goals. And that's so important. Do you have somebody actually looking out for your goals, or is your money just being allocated into stocks, bonds, and mutual funds? Maybe not even the right products for you. And so that's what we do at our workshops is we help people. We sit down, what are your goals, and does the plan that you have, is it actually going to get you where you want to go? And are you protected from the next crash? What if there's another 2008 and you lose 30 or 40, maybe even 50%? What if you're 10 years away from retirement? How is that going to impact you? And so it's so important for you to take action and say, does the money I have and the person I'm working with, are they actually helping me with my goals?
If you're in the retirement hazard zone, now explain to folks who maybe are listening for the first time what that zone is.
It's 0 to 10 years away from retirement. You're getting closer. You no longer have the time horizon to take another 2008, a 30, 40, 50% drop, because you don't have time to make it up. Let's say you're 2 years away from retirement and you're looking forward to it, and boom, you lose 40% of your entire portfolio. Your $1 million portfolio goes down to $600,000. Everything changes. You're not retiring when you wanted to retire.
Really, if you think about it, it's going to set you back probably 5 years again, like it did the last couple times, Jim. And if you look at it, what income can you count on from a pot of 401ks, 403bs, IRAs? You have no idea how much income that will generate. And so you have to decide, am I going to let this potentially happen to me again when the next market correction comes, now that I'm so much closer? And how long will the income last? You can't know that from a pot of stocks, bonds, and mutual funds.
Doug, these seminars take about 60 minutes. What can people learn from these seminars?
Well, there's so much good information put out. You can in a non-threatening environment. We educate you on what your choices are, how to position your assets so that you know exactly what income is going to be generated from your accounts in retirement, how you can secure a portion of it and actually profit when the market is going down. It's important to understand, Jim, that your pie chart, what most of us have been taught, that portfolio of stocks, bonds, and mutual funds has not worked. It's failed massively in the last two corrections, and you have to move to safety when the market's crashing, and unfortunately, mutual funds don't allow you to do that.
And what we were also told was buy and hold is the way to go.
Yeah, and it's not. It's failed miserably. So Jim, just imagine what happens if the next market crash happens. Imagine if you got a text message stating to you, hey, don't worry, your financial advisor has just moved your funds into a safe position. You're now immune to what's going to happen with all the carnage of the stock market dropping. You're actually going to make money when the market goes down, and your goals are going to be on track to get you retired when you want to be retired. That's what we're talking about at these workshops. They're this Tuesday and Wednesday, and then the following Tuesday and Wednesday. These are the last workshops until August. So if you don't know where you're at or you want to find out these things, give us a call, 466-5634. That's 466-5634 to reserve a spot. You're going to learn a lot more than you probably ever have about your retirement.
Tell you what, you need to know, because there's a lot of us, when we retire, we don't want to work.
Don't want to go back.
Again.
Don't want to, no more Mondays.
Right?
That's right.
Done our deed for God and country. We don't want any other Mondays, okay? We just want lifetime vacation from that point on.
So don't let something steal that from you. Get a plan that works and that protects you from a major market drop and gets you to landing into retirement when it's time.
You can sign up for the seminars at 466-5634. 466-5634. Get signed up because they're coming up. They're coming up Tuesday and Wednesday, the 5th and 6th, and also May the 12th and May 13th. 466-5634. And if you don't want to go to the seminars, you can still call and learn more. These guys are happy to answer the phone and just talk to you a little bit about your individual situation and give you a lot of help on what the future can hold for you. Accelerated Wealth, 466-5634. Chris, Doug, thanks so much for coming by.
You bet. Make this Monday count.
817 to KVOR. Right now, traffic and weather together. Here's Sean Martinez.
Brought to you by MyCleanPC.com. We have an injury crash westbound Dublin east of Union blocking traffic. Another accident from earlier, Peterson Road and Pony Tracks. A stalled vehicle northbound Union at Vickers blocking the left lane. A cement spill at Castilla and Wasatch.